A storm in the distance often sounds louder than it truly is. The wind begins to rise, the trees bend, the sky darkens, and the creatures of the forest scatter, convinced something catastrophic is about to happen. But the oldest trees rarely panic. They have seen too many storms to confuse noise with destruction. Economic fear works the same way. When panic arrives in markets, it rarely walks in quietly. It arrives screaming through headlines, television screens, conversations, and nervous speculation. Prices fall, predictions become dramatic. And suddenly, people who felt brilliant a month earlier feel as if the ground beneath them has disappeared. I have watched this happen many times, and every time it happens, I am reminded of the same quiet truth. Fear does not destroy wealth. Human behavior does. Markets do not collapse because businesses suddenly stop existing. They collapse because human beings, collectively, begin acting in ways that abandon patience. And patience is the one resource most people cannot hold on to when fear enters the room. I learned this lesson slowly, not through a single event, but through decades of watching the same emotional pattern repeat itself again and again. When things are good, people talk loudly about their success. They speak about markets as if they are easy puzzles. They describe risk as something manageable, even trivial. But when fear arrives, that confidence evaporates. The same voices become quiet, nervous, uncertain. And the strange thing is that the underlying businesses often have not changed very much at all. Factories still produce goods. Customers still buy products. Employees still arrive at work every morning. But the perception of value changes dramatically. This is the moment where discipline quietly separates two types of investors. One group reacts to emotion. The other group reacts to reality. Reality moves slowly. Emotion moves violently. If you can learn to distinguish between the two, panic becomes something very different. It becomes opportunity, but opportunity only reveals itself to people who are calm enough to see it. Most people are not. Fear compresses time. It makes people believe that every decision must happen immediately. Sell now. Escape now. Protect what is left. But urgency is rarely a friend of good decisions. In fact, urgency often disguises poor thinking. I have always believed that the greatest advantage an investor can develop is not mathematical brilliance. It is emotional endurance, the ability to sit quietly while others demand action, the ability to think clearly when others cannot, the ability to remain patient when impatience becomes contagious. Over the years, I began to understand that wealth is not simply a financial outcome. It is a psychological game played across decades. And like all long games, the real advantage belongs to those who understand human behavior. This understanding led me toward a quiet philosophy that guided many of my decisions. I call it the silent advantage. The silent advantage is not a strategy in the traditional sense. It is a way of positioning oneself in a world that constantly rewards noise, attention, and immediate validation. But markets rarely reward noise. They reward clarity, and clarity almost always grows in silence. The first part of this philosophy is something many people find unusual. I have never felt the need to reveal my exact net worth. People are fascinated by numbers. They want precise figures. They want rankings, comparisons, confirmation of status. But numbers have a strange effect on relationships. The moment someone knows the scale of your wealth, their perception shifts. Some will admire it, some will resent it, some will begin measuring themselves against it. And once comparison enters the room, sincerity quietly leaves. I discovered long ago that privacy preserves peace. Wealth does not need witnesses. It only needs discipline. Silence around numbers protects more than just privacy. It protects clarity of thought. When people do not know the exact scale of your resources, they cannot build expectations around them. And expectations have a way of shaping behavior in subtle, unhealthy ways. Another rule I have quietly followed is never announcing my next move. Markets are delicate systems. Prices are shaped not only by facts, but by the expectations of thousands or millions of people reacting to those facts. The moment an investment idea becomes widely known, it begins to change. People rush toward it. They exaggerate its potential. They distort its logic. Soon, the original idea disappears beneath a pile of speculation. A good investment is like a seed. It requires time beneath the surface before it can grow into something substantial. If you dig up the seed every day to show people where you planted it, the plant never grows. Silence allows ideas to mature. The third element of the silent advantage is protecting your edge. Every investor who has spent enough time in markets eventually develops some form of insight. Not a perfect formula, but a perspective that helps them see value where others do not. This perspective is precious. Yet many people feel compelled to share it. They write about it. They talk about it. They display it publicly as proof of intelligence. But markets have a way of neutralizing advantages that become popular. Once too many people follow the same strategy, it stops producing unusual results. The advantage disappears. I once watched a remarkably talented investor reveal the precise mechanics of his approach during a series of interviews. At first, he was praised for his transparency. Within a few years, the strategy became widely copied, and soon after that, it stopped working entirely. Information is leverage. Leverage loses power when distributed without caution. There is also a lesson that arrives later in life, when wealth grows large enough to influence the future of the next generation. Many parents assume that providing absolute financial security for their children is the ultimate act of care. But certainty can be surprisingly corrosive. Ambition thrives on uncertainty. When a young person knows that their future is already guaranteed, the urgency that drives growth weakens. I have seen families where the first generation built a fortune through discipline and sacrifice, only to watch the second and third generations slowly lose the hunger that created it. Children deserve support. They deserve opportunity. But they should never feel that life has already been solved for them. A challenge gives life its meaning. There is another form of noise that many successful people feel pressured to produce: public generosity. Philanthropy has become a stage for recognition. Donations are announced, photographed, celebrated. But generosity that requires applause often changes its character. I have always preferred quiet giving, not because secrecy is virtuous, but because the absence of attention keeps motives pure. The moment charity becomes performance, something important is lost. The same principle applies to personal hardship. Every life contains periods of difficulty. Loss arrives unexpectedly. Doubt appears when least convenient. But broadcasting those moments rarely creates strength. There is dignity in processing certain experiences privately. Not every wound requires an audience. These habits, privacy, restraint, patience, create an unusual position in the world. They allow you to remain underestimated. And being underestimated is one of the most powerful advantages a person can possess. When people underestimate you, they relax their defenses. They speak freely. They reveal their assumptions. Observation becomes easier. Predators in nature rarely announce themselves. They move slowly through tall grass, unnoticed until the moment action becomes necessary. Markets reward similar patience. During periods of economic fear, I often spend more time doing nothing than doing something. That may sound strange, but inactivity is sometimes the most rational response to chaos. When prices fall rapidly, people assume the correct response is immediate action. Sell quickly, rearrange portfolios, search desperately for safety. But in many cases, the best action is careful observation. Has the value of the business changed, or has the emotional temperature of the market changed? Most of the time, the answer is emotional temperature. Fear spreads quickly. But businesses are built over decades. Factories do not vanish overnight. Customer relationships do not disappear in a week. When fear disconnects price from reality, opportunity begins to form. But it forms slowly. Like fog lifting from a valley, clarity returns gradually. The investor who remains calm during those moments gains something priceless: perspective. Perspective allows patience, and patience allows compounding. Compounding is often described as a mathematical phenomenon, but in truth, it is a psychological one. The hardest part of compounding is not calculating returns. It is maintaining discipline long enough for those returns to accumulate. Markets tempt people constantly. They offer excitement, drama, urgency. But wealth grows quietly, year after year, decision after decision. Small advantages stacking on top of one another until the results appear almost mysterious to outsiders. People often ask what strategy I follow during economic panic. The answer disappoints them. I slow down. I think longer. I listen less to noise and more to fundamentals. And most importantly, I remember that human emotions move much faster than business realities. When you understand that difference, panic begins to lose its power. Storms pass, forests regrow, markets recover, but only the patient are still standing when the sun returns. And over the years, I have come to appreciate something even deeper. Silence is not weakness. Silence is control. It allows you to think without interference, to move without announcement, to succeed without inviting unnecessary attention. In a world obsessed with visibility, invisibility can be an extraordinary advantage. Because the loudest people are usually reacting to events, the quiet ones are preparing for them, and preparation, sustained over time, is what quietly builds fortunes. When the next wave of fear arrives, and it always does, the crowd will again rush toward noise and urgency. But those who understand the silent advantage will do something different. They will sit quietly. They will observe. They will wait for clarity. And when the moment arrives, they will move without needing to tell anyone they ever saw the storm coming.